Hello everyone. Today I would like to look at a faraway country that is Australia. The Central Bank of Australia, the RBA, met early June and decided to leave its reference rates unchanged at plus 0.25%. So it's an important decision that shows first that the recession expected will probably not be as harsh as expected, and also another good news for Australia is that the number of people infected by the virus fell and that some sectors in the economy could restart earlier than expected. We're not in a blue sky scenario yet. First quarter GDP contracted by 0.3%, and in Q2 it's expected to fall by 8.4%. So this says still there are weaknesses, but in this situation, the central bank will stay accommodative at least until there's a sustained pickup in employment and also in inflation. Because currently what's the most important is to restore, to sustain and to nurture confidence of both households and businesses. And the RBA is in a good position to do so because it's still in positive territories from a rate point of view. And also it didn't use much of its QE program. It only bought 50 billion of Australian debt since the beginning of the program and has done no such operation since early May, since May 6. So the RBA is in a good position. It's got leeway and it's got flexibility that will probably avoid the central bank to go into negative rates. So how is the market perceiving this? Offshore investors, like Japanese investors, are currently buying Australian dollar bonds. First of all, they believe the RBA is credible, and we all know that credibility is one of the most important attributes of a central bank. And also because the central bank is not going to go into negative rates for the reference rates, it has an impact on the whole curve, especially for a AAA country. So yields in Australia are higher than in New Zealand, where the central bank is open to negative rates. It's of course higher than in Japan, where the reference rate is negative since early 2016. And more recently, it has become higher than another AAA-rated country. But that country saw its balance sheet grow from $4.1 trillion to $7.1 trillion in just 3 months, that country being the United States. So currently in such an environment, it's very understandable that Australian dollar bonds look attractive to investors. Thank you.